Awesome. Thank you, Lily, as well as Jim, Tim, and Zach for that amazing presentation. It was fantastic to hear from real companies doing actual building, and I'm really excited to see where the industry is headed. And I have a feeling that this talk will continue to build on the grounds that you guys just laid. Hello, everyone. I'm Cody Kaplan, and welcome to our next panel, Where's the Money? Real Estate and 3D Printing. You've learned a great deal about the technological elements, and now we'll be looking at the other side of the industry, the financial perspective. We'll be looking at the industry from an investor and real estate underwriting perspective from leaders of partner companies, Sperry Commercial Global Affiliates, and SIRE 3D, who are collaborating to bring 3D printing to commercial real estate development and 3D CP education to universities around the US. Through this talk, we'll be exploring a broad financial overview of this industry and the difference of a 3D printed versus traditionally built house from a valuation perspective. And then we'll hone in on what steps need to be taken for this industry to capture that value. We're joined by two leaders in the space, Sam Suzuki, CEO of SIRE 3D, and Mark Hinkins, President of Sperry Commercial Global Affiliates. To give you guys a little bit of background on each of these two amazing gentlemen, Sam, or Sammy Suzuki, is the CEO and founder of SIRE Group LLC, a developer for landowners, nonprofits, and financial institutions using 3D CP technology for construction. Mr. Suzuki spent 13 years as a principal and CEO of Vintage Group LLC, a $500 million real estate development group that he co-founded in 1994. Mr. Suzuki is currently working on a doctorate in real estate development with a focus on 3D printing. His dissertation focuses on the reduction of construction costs using 3D printing technology. Mr. Suzuki has also served on the board of directors for Asian Real Estate Association of America as committee chair for their commercial division and board of directors in New York City, and committee chair of FIA BCI USA Commercial Division. This year, he will finish his doctorate at Liberty University. In total, he will hold a master's degree in finance from Liberty University, a bachelor's in finance from Pace, and soon a professional leadership degree from Harvard University. Next, I'll introduce Mark. Mark is the global president of Sperry Commercial Affiliates. He's a seasoned professional in investment real estate with prestigious credentials, including CCIM designation, Fellowship of the Royal Institution of Chartered Surveyors, and California Real Estate Brokers License. Over Mark's 30-year career, Mark has represented property owners, investors, institutions, lenders, and borrowers in the acquisition, disposition, and leasing of commercial property across all property sectors. Before becoming global president of Sperry in 2020, Mark founded Trimark Commercial Real Estate in 2016 and was president and CEO of Hinkins Real Estate Analytics from 2011 to 2016. Mark was an investment broker in the Oakland, California office of Grubb & Ellis Company and was a retail investment specialist with Lambert Smith Hampton in the UK. Mark and Sam have seen every part of the real estate industry, and we're excited to have their insights on the 3D CP industry today. Mark and Sam, thank you guys for being here. To open up this conversation, I'd like to go broad. Sam, I'm aware that your dissertation coming out is on the financials of this growing industry. While it is not yet out and you can't give us exact details, I'd love if you could share some overall ideas on what makes this industry attractive for investment, and also maybe how you would go about evaluating this industry to give our audience a broader understanding of the value of what this industry could be.
Sure. Thank you, Cody. We're taking a different approach. We're taking an approach of that we're not manufacturing machines. We're not producing concrete. What we are focusing on is the implementation. And what my paper speaks about is the comparison of traditional construction with 3D printing using Lean Six Sigma process, where we're comparing the cost of a traditional construction to a 3D printed project, but not only on hard costs. We are also showing the hard costs, soft costs, the interest carry, and the and land cost is always straight the same. And we're showing the difference of a development cost where the investor is not investing in the hard cost. The investor is investing in the development cost. And we're showing where the returns can be significantly different because the process may be faster, the material cost may be lower. And these are all maybes because we're in this exciting time that as a group, we're all producing this. And there are many of the guys here that I've spoke to, I've talked to, and they're looking at me in a different approach because I'm more of a banker. I'm trying to figure out how we're going to be able to finance all these guys. And I think it's exciting because there is really no banker out there that knows how this is put together and saying that, hey, I need the money. Show me the money, right? Show me the money. But the guys don't understand the technology because a lot of the guys here are scientists. They are not developers, or they haven't really put together an investment where it's the institutions are saying, we like this stuff. And I think that's what we see the future is going to be as Sperry and as SIRE Group.
Wow. And one of the things that really stood out from one of our previous conversations is kind of how you think about the opportunity of this market. Could you kind of give some perspective on where you think the value will come from in the next 5-10 years?
Are you asking me or Mark?
I'm just a follow up to that earlier question. I guess not in terms of in the hard costs of the individual homes, but more in terms of who is the demand for this that you see this industry in its evolved form serving.
So we're going to see it in the multifamily business. We're going to see it in the storage business, limited service hotels up to about 3 stories, 4 stories. We're going to see it on logistics, and we are probably going to see it in data centers and senior housing because of the efficiency of the utility costs. Everyone's looking at the build, but we're looking at also the operation of the building. How are we going to reduce the cost of operating the building? And my counterpart, Mark here, because of his background of surveying and appraising, he can show you the difference in the number. And he can just show you in a simple number and say, there it is. That's that aha moment with showing it. So I'd like to really bring that over to Mark, how he's showing the valuation.
Absolutely. I think that really is a great segue, Mark. If you through your kind of experience and the evaluation lens, where does the additional value come from? And yeah, would love to hear that.
Yeah, well, thanks, Cody and Sam, for having me on today. So excited to be a part of this. It's certainly pushing forward with a new emerging technology. And because it's a new emerging technology and we really don't have any large scale printed commercial buildings, the majority of the print work development that's been done so far is really single family homes, residential uses. So what we're planning is the development through 3D printing of large scale commercial buildings. So think warehouses, think industrial buildings, think multi-family, multi-tenanted apartment buildings above retail. So this is something that has yet to be developed. And I think the valuation challenge is that they don't exist. So it's really looking at it from the perspective of the tried and tested methodologies that we use to appraise property. And we could spend 2 years talking about this at a college class on how to appraise real estate, but I'm just going to go over the 3 fundamentals and show you how those can be attributable to value that I think a 3D printed building could achieve above an alternative form of construction, such as concrete tilt-up, such as steel frame, or such as wood frame. So the 3, and forgive me for kind of going into basics here, but there are 3 real tests that we use and methods that we use to value commercial real estate. And those are the sales comparison approach, the income approach, and the cost or replacement approach. And I'm going to look at all 3 of those. The one that you're most likely familiar with, we're all familiar with, is the sales comparison approach. And that's what we all use for residential properties. We all know the value of our house because we're all tracking our local neighborhood. We know what the property sold for down the street or in our neighborhood, and we all have an opinion as to what the value of our home may be. But that also can apply to a commercial building. And when you apply it to a commercial building, you're really looking at the fundamentals of location, location, location. That always is the underlying directive for value. But on top of that, there's a whole layer of other aspects that we bring in. And this is where 3D printing can really come into play, because not only are we looking at location, 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 but we're also looking at the suitability of the improvements for the use. And a 3D printed building, that's adaptable. You can adapt the design of the building to really be specific to a particular use. But we're also looking at the highest and best use of the land. So we're going to assume that the land being developed for whether it's a multifamily building or industrial warehouse building, that is the highest and best use. Another major factor where 3D printing really comes into bringing value is the economic life and the age of the improvement. So with concrete, you've got a really extended economic life from the improvements. So that will bring in it additional value over, say, maybe a wood frame building that's got maintenance costs. It suffers from erosion or mold or rot. I mean, you know, you've really got to keep up on those. But with a concrete building, it's waterproof, it's fireproof, it's wind resistant, it's hurricane proof, it's earthquake proof. So there's inherent value in that. So when you bring all these factors into play using the sales comparison approach, you can really argue that a concrete 3D printed building will have some additional value over and above a alternate form of building, because it's going to be stronger, it's going to last longer, and it's going to have a lower economic life. The other methodology that I wanted to kind of bring in here is the income approach. We use this on commercial buildings that are leased. So where a building is a multi-tenant building or even a single tenant building, but the tenant is paying a rent or the tenants are paying rent, that rent creates what we call a gross rental income for the building. And then the owner of the building, they have to deduct off that rent their operating expenses. That's, we call that OpEx, so operating expenses. And inside operating expenses is a really key aspect of where 3D printing can bring value, and that's insurance. So if you look at insurance premiums today, they're skyrocketing. And not only are they skyrocketing, but just on Monday, State Farm, one of the largest insurers, risk carriers in North America, announced it is not going to renew 70,000 policies in California. And they cite the reason being it's too risky. There's too much exposure to fire and to mudslides and floods. It's just too risky. They're not getting the return on their premiums. Now, these 70,000 policies that they're not renewing, 35,000 of those are multifamily buildings. 35,000 are multifamily buildings. So what's going to happen is, how are you going to insure those buildings? So the current technology for constructing those wood frame or partial concrete buildings, you've really got to look at 3D printing as the future, because how are you going to insure these buildings when the insurance providers won't insure that form of construction? So what 3D printing does is it really allows an insurance carrier to look at a particular asset and say, that is a safer building, it has a lower risk. If it's got a lower risk, you'll get a lower premium. If you have a lower premium, that reduces your operating expenses, and that increases the amount of what we call net operating income that you can generate from the building. If you have a higher net operating income, you capitalize that. It's a whole methodology, but you just capitalize that, and that creates the market value. So increased rent, lower operating expenses through 3D printing, and lower risk profile equals a higher value. So we can see already from the cost comparison approach, that can work in favor of 3D printed buildings. From the income approach, that can work in favor of 3D printing. And then the other and final major method is the cost the cost approach. So the cost approach is really used for insurance purposes, and it's used by developers. They're really looking at what is the cost of building that building today, not its market value, which we just talked about, but what is the cost of building that building today? And again, Sam can give you the numbers based on the metrics that we're utilizing today. Our projection on the scale that we're going to be printing at is that the cost of building that property versus, say, a traditional steel frame building or a concrete tilt-up building will be a lot lower. And somewhere each property is going to be uniquely different. But if you have, let's just say, a 10,000 square foot warehouse building, perhaps the construction cost of the structure is 20% lower than an alternative. Well, that 20% lower cost means then that a developer can be more competitive because his residual land value, after he deducts all the costs, his residual land value is going to be higher because his construction costs are lower. So he's going to be more competitive to bid and secure more site opportunities to develop buildings. So there's 1,000 things that go into the valuation. I could talk literally on and on about this, but you can literally see that no matter what methodology we look at, 3D printing comes out on top. Certainly in terms of the theory that supports appraising the building, and no one's really done it yet because the properties just don't exist out there. But once they start to get printed and built, then we'll get some real metrics. Then we can get some real data. We can see how appraisers approach the challenge of appraising a 3D printed building. But there's certainly a lot of compelling evidence to show that 3D printing buildings will have enhanced value over alternative forms of construction. And it's all driven by, I'll quantify this, it's all driven by supply, demand, usability, the appropriateness of the improvements and where they are. But we really have a lot of flexibility and design freedom with 3D printing, and that is exciting.
Wow, that was a great overview of the appraisal perspective of it. It really is, and the excitement that you have for it is very exciting. But one thing that I find very interesting, and I think our audience will too, is that Sperry and SIRE are specifically focused on commercial buildings with 3D printing. Most of the speakers that we've had today are focused more in the residential area. Could you guys go into your reasoning behind that and what your perspectives on commercial versus retail are?
Well, if you look at both of our experience, I'm 40 years in the commercial business, and Mark is 30 years in the commercial business. We don't know residential, so of course we're commercial guys. We chose commercial because everybody else was choosing residential. And commercial, you need a lot of experience. You really have to understand. You just heard what Mark described in a very short amount of time, a complex idea. Commercial is very complex. And in order to explain it, you really do need those years of experience, and you have to be vetted. It's not very easy to get into the commercial business. If you look at residential brokers, there's about 100,000. If you look at commercial brokers, there's only 2,000 if you were comparing to numbers. So there's a big disparity between commercial brokers and residential brokers in numbers. So we felt that was the right way to go. Also, how are you getting the money? We're going to have all these printers. We're going to have all these people out there, and they're going to, the developers are going to say, well, who's going to lend us the money for the construction? Who's going to do this, right? So we analyzed the problem of, and it was discussed in your sessions, is that we see a labor shortage and we see a problem. We have all these machines out there, but we have no operators. So what we decided to do was work with the universities. That's why I'm working with you, Cody, which you know, I mean, Cody, you know that, but we feel that you are the future. And so we decided that we're going to take a different approach. We're going to go toward the academic approach, and we're going to create, within our company, we're going to train our agents how to do 3D printing, which Mark took the initiative and he created a university kind of platform to teach our agents. We have about close to 70 offices around the United States, and we have to train our agents to understand 3D printing. So Mark took the initiative to create the university platform within our company. The university platform is called Sperry University. And then let you know, which I didn't put in my resume, is that I will be teaching at the University of Texas, Arlington, and I'm going to be teaching a graduate certificate in 3D printing. So it'll be a master's program in 3D printing. And we decided as a group, we're going to go out there and we're going to teach people about 3D printing, and we're just going to be able to build a labor pool that doesn't exist right now. That's why we're so excited, because we have money, we have valuation, we have commercial properties, and because we're in theory, these properties are going to bring back a better return on investment. So we're talking in a commercial sense. We're going toward the institutions to give them better returns on investments. The insurance companies, you'll see it, mark my words, within 10 years, insurance companies will no longer insure wood frame buildings. They're going to say, you have to 3D print it. So we see that changing the way construction is going to be done, because it's like Mark said, we're not insuring in California. That's just a starting point. Now you can't get your financing because you can't get your insurance. You're kind of got to build 3D printing. You have to go that direction because you're not getting insurance. We're already seeing it in Florida. Lucky for us, we have multiple offices, so we can see this data coming in, right? So Mark can explain that too.
Yeah, it's exactly. So we have, as Sam mentioned, a network of offices around the US, all the way from Florida to the Pacific Northwest, so coast to coast. So we get to see, we have boots on the ground in all the metropolitan markets across the country, and all of our agents are professionals. They're career professionals in commercial real estate. So they understand retail, office, multifamily, land, development, all the asset types. So what we're providing them to enable this industry to be populated with the best trained professionals is an education, as Sam just relayed there. And the reason that they'll take this certification is that we are professional and we want to be able to talk the language of 3D printing with our clients, our developers, and show them an alternative underwritten methodology towards a building problem, and say, hey, okay, here's the traditional methodology. Here's a fully underwritten, if you were to do 3D printing or to incorporate 3D printing as a part of the development. So by being educated and trained, we really want the professionals out there representing this industry to know what is achievable versus what is misunderstood by the industry. It's more of a kind of a pipe dream. You know, we've seen all these amazing designs, but at the end of the day, what's feasible and what's justifiable? Because you can have an architect come up with an incredible design, and that's how everything starts, and it gets kind of pulled back to a point of a level where that is something that can get built and can be financially underwritten and makes and hits the return on the investment that you need to get. But the original pipe dreams might just be a little kind of too futuristic. So we're there to kind of work with the developer, the end user. The end user would be the occupier or the tenant. We're there to work with SIRE or the other developers, and of course we're there to work with the lender. So we're kind of the conduit that can provide the advice, and you've got to be trained to do that, and that's what we've designed through Sperry University. And you'll be certified, so you'll get a certification that you are certified in 3D commercial printing for real estate development. It's very exciting and very cool, and it's a fundamental necessity that we do that as this industry starts to evolve.
I think it's really insightful that you guys are creating this Sperry University. It's very exciting, and it's something that I was excited to hear that it's multiple players in the space are thinking that this is an important thing. To hear that you guys are working on this is very exciting. When we've talked a lot about underwriting of these 3D printed houses, and I was curious, in an industry that is developing, where you don't necessarily have, as we talked about earlier, the comp data, where you underwrite another house and you understand how it works. So could you walk me through the process of what considerations are needed to underwrite a 3D printed house at this stage?
So we take the traditional development approach as a developer. So of course, I'll break it down in a very simple formula, right? So LC, land costs, SC, soft costs, HC, hard costs, IC, interest costs, and that equals your project costs. So what we're doing is we're for land costs, it's what it is. So let's say it's $1. So let's put that to the side. What the difference are is going to be the soft costs, the hard costs, and the interest carry. The interest carry is based over time. So in theory, if a 3D printer is a shorter time than traditional construction, that means we're paying less interest. So our cost starts coming down by the interest costs, not just hard costs. Everyone just looks at the hard costs. They're only focusing on the hard costs. There are other costs involved in a development. So we look at it as a total approach, not a segmented approach. A segmented approach would only be hard costs. So in the underwriting process, yeah, maybe the hard costs a little bit more, but then you saw how fast we built it, and we just dropped down our interest cost. And let's say a traditional build was $100, and we built the development costs at 3D at $80 a cost. Now we can finance this. Since we are financiers, since we are developers, since we are commercial guys, we look at a professional approach as though, don't give me just the hard cost. We're not construction guys. We are developers. We're looking at the total project. The other thing is that because we're building a different style of building, you're getting a different kind of tenancy. So that's another thing. And what we've been seeing from all the research is that 3D printed buildings are also cost effective for utility. So we're not only looking at just building it and selling it, we're also looking at building and operating it. And that is where it's a big difference when you're a commercial guy. When you're a residential guy, you build it, you sell it, he's gone. Not on our side. We build it, we still got to deal with the tenants, and we still got to rent it out, rent and lease out these commercial properties. So our approach is way different than a residential builder because we're also looking at the after product. So we may add extra costs and hard costs because our tenant demands it. For example, air conditioning. We might not put the best air conditioning in a house, but a commercial tenant wants the best air conditioning, and we have to spend the extra money for it to attract the tenant. So the underwriting is way different than a residential approach because we're bringing in a client that's staying in the building. So they may pre-lease it and say, hey, I want this in the building, right? You know, I like to think of it that way, and that's the way we think as a commercial guy.
Well, we unfortunately only have 2 minutes left. I know that we could talk all day long about this. I would love if you each would give a 30-second pitch on what needs to happen in the industry for the industry to move forward. And if we can just keep it as quick as possible, but would be really insightful.
You want to go first, Mark?
Sure. Well, you know, build it. We have to build it. So the commercial side of the equation is just beginning. We have many projects in the pipeline. A new project just came into us in Kansas last week, which is a 15-acre development parcel that was totally wiped out by a tornado that blew through, wiped out the improvements. Now they're saying, you guys, let's look at your underwriting. Let's print the multifamily, the retail on the front. So we just have to build it. Once we build it, it'll exist. We'll then have the metrics, and we'll be able to extrapolate from the metrics, the value add from it. So in summary, let's start building.
Great, Mark. My 30-second pitch, workforce.
It's going to have to be more of a 15-second pitch.
Okay, workforce. We got to bring the cost of cement down. We have to bring the material cost down. That's why you're seeing all the 3D printing companies partnering up with cement companies. That's the future. You'll see the biggest players in the 3D printing guys are going to be the guys who are already connected with 3D printing guys, the concrete guys. And then the next thing that we have to worry about is financing costs. How do we get the money? And we got to get the bankers and the private equity guys and the investors to be on board with us.
Fantastic. Well, Mark, Sam, thank you guys so much for joining us today. And we will be moving on to the next speaker, but please stay connected. And anyone who's interested in connecting with Mark or Sam via LinkedIn, please do that through our group. Thank you guys so much.
Thank you, Cody. Thanks, Sam.
Thank you. Bye.